And I think it is good news that the open interest has been picking up actually fairly dramatically in the yen and the British pound. And then just to wind out the quotes, the Swiss franc trading down 29 this morning, the Japanese yen down only 5 ticks, and the British pound down 46. Richard, have a good weekend, and we'll take another look on Monday.
Well, yes, we will, and we'll see what the market thinks of the presidential debates, too.
Right. Right.
Thank you, Ken.
Okay.
And that was Ken Schleen coming to us from Chicago. Additionally, in the news, there's been a lot of talk about the OPEC meetings, and they're trying to come to some sort of compromise to keep oil prices from continuing to slide. The proposal that has been issued, and which is in today's news, is calling for members to halt their overproduction in return for increases in their official quotas. Now, exactly how that's going to balance off one against the other, the details of that are not yet apparent to us. But keep in mind that after an 8-year war, there's an awful lot of bills that have to be paid, and there's an awful lot of oil that's going to have to get produced if they are going to get paid. So it'll be interesting to see the way that that all pans out. Standing in for Gene Morgan, this has been Richard McGinnis. Have a good trading day and a good weekend, and don't forget to join us here at 1:30 this afternoon as we wind up the week. Join us at Charting the Market today here on Channel 22. Thank you.
This has been today's opening market commentary with your host, Gene Morgan, brought to you by Gene Morgan Financial.
If you're going to hunt for investment bargains, if you want to make sound investment decisions in today's volatile market, the most powerful, reliable tool you can use is information. That's right, information. And now every month, Standard & Poor's Stock Guide will bring you information of a scope you've never seen before. This big, unique 268-page stock guide provides you with essential facts and figures on more than 5,000 listed and unlisted stocks. You'll find out about their earnings, prices, dividends, company products, over 40 revealing characteristics. The guide also covers mutual funds, feature articles, and much more. This is the famous stock guide many professional investors and brokers consider the information source, and over 375,000 smart investors turn to it every month. Now you can use it as a solid foundation for your investment strategy. Yes, you can receive 6 months of Standard & Poor's Stock Guide for only $40, a real saving over the regular subscription price. Simply call this toll-free number, 800-248-5585. That's 800-248-5585. Send no money now. We'll bill you later.
Happy Friday morning to you. This October 14th. I'm Mike Russell, sitting in for Maria DeLong today. The Maxi contract is up 200 basis points as we start the day. And reviewing yesterday's action on Wall Street, the stock market advanced yesterday. The Dow Jones Industrial Average was up 7 points at 2,133.36. Yesterday's volume on the New York Stock Exchange totaled 154.5 million shares. On the big board, there were 749 advances, 670 declines, and 535 issues were unchanged. There were 31 new highs for the year and 12 new lows. Overseas, stock prices closed slightly higher in moderate trading overnight on the Tokyo Stock Exchange. The Nikkei average of 225 selected issues, which fell 136.07 points yesterday, gained 33.27 points today in Japan to close at 27,306.57. Brokers said trading was moderate there ahead of the weekend. Demand-related issues were selected for bargain hunting, they said. Constructions and trading houses advanced along with real estates, paper pulps, banks, non-life insurance, and securities. Transportation issues in Tokyo were also gained. Non-ferrous metals, steels, and precision instruments ended generally lower there. The 5 most active stocks in Japan included Kawasaki Steel, Osaka Gas, Marubeni, Ito, and Sumitomo Metal. Elsewhere in the Far East, in Hong Kong, stocks closed sharply higher in moderate trading Friday on the Hong Kong Stock Exchange as local investors shrugged off a higher than expected U.S. trade news. That was the deficit that was released yesterday. In London, share prices were mixed with an easier bias at mid-session in London, having shown little reaction to a batch of United Kingdom inflation indicators, suggesting a possible continuation of yesterday's low-key gain. U.S. stocks in London were mixed with a firm tone early today. IBM rose an eighth ahead of its earnings report, which will be out today. economic data due today is expected to be in line with forecasts, but some analysts say a higher than expected retail sales figure could weigh on stocks in New York at the opening today. Lack of surprise could lead to a firm open. A rising dollar and encouraging remarks on inflation from Federal Reserve Chairman Alan Greenspan could give stocks a lift, brokers said. However, several analysts said the market has reverted to its recent trading range pattern, moving from news report to news report and failing to follow through on a reaction in either direction. At a news conference in Tokyo, Mr. Greenspan said recent U.S. trade data is in line with forecasts. Right now, I have the Dow Industrials are up 3.38. The transports are up 0.44. Utilities up 0.24. The tick is a plus 131. And we have a up market so far this morning. The NASDAQ is up 0.51. The Amex is up 0.20. Market analysts and traders say that U.S. interest rate futures could inch lower if today's U.S. economic data confirm that growth is not moderated as much as previously thought. Treasury bond contracts could be ripe for at least a small sell-off given the market's rebound yesterday despite the dollar's sharp drop after the latest U.S. trade deficit figure of $12.18 billion. Gerald Walsh, an analyst for Revco Incorporated, said the bond is going to grind lower, but not significantly lower. Analysts also noted the indications of economic strength contained in the weekly report on initial jobless claims released yesterday. First-time applicants for unemployment insurance fell by 12,000 for the week ended October 7th. Despite the bearish fundamental outlook for T-bonds, the market appears stronger on technical charts, according to Richard Spurgeon, fixed income analyst at Technical Data Corporation. The dollar opened mixed today against major European currencies and rose in Tokyo. Gold was unchanged. The greenback strengthened marginally in most European cities after a week of steady declines, capped yesterday by the release of a U.S. trade report for August that put the deficit at the high end of expectations. The report of a 0.4% drop in retail sales in September is pushing bond prices higher this morning and should lift stocks at the open, analysts say. Shearson Lehman Hutton analyst Newton Zinder said a gain had been expected and that producer prices came in under estimates. Further information on that report, the government says inflation at the wholesale level, the producer price index, was 0.4% in September. The Labor Department says falling energy prices helped to offset steep hikes in food costs caused by the drought. When figured on a yearly basis, wholesale prices rose 4.5% last month and have climbed 4.3% in the first 9 months of this year. The figures were adjusted for seasonal variations. The government reports the weakest car sales in nearly a year dragged retail sales down 0.4% in September. It's the second monthly decline in a row and the sharpest drop in sales since April. The Commerce Department says retail sales totaled $133.7 billion in September after adjustments for seasonal variations, but not for price changes. That's a decrease of 0.4% from July. The debating's behind them now. Michael Dukakis and George Bush face 3.5 weeks of hard campaigning to Election Day. Their focus is on the big states with lots of electoral votes, starting today with California. Dukakis will campaign in Los Angeles, Sacramento, and Pasadena with a side trip to Seattle, Washington. Bush will be in Cerritos, La Jolla, and L.A. As the debate recedes into campaign history, the Snap surveys count Bush the winner, and an ABC poll indicates the encounter didn't change many minds. Before the debate, the poll showed Bush ahead of Dukakis 53 to 43%. After the debate, a poll of the same voters made it 54 to 44%, also for Bush. Sun Microsystems Incorporated has raised prices for the second time this year on a range of products, citing a shortage of key memory devices used in the building of computers. Looking at the Dow Industrials right now, the Dow Industrials are up 9 points. Very strong opening today. Transports are up 0.74. Utilities up 0.24. The tick is a plus 185. Volume is 5 million shares. Advancing issues 467, decliners 145. The up volume is 4.3 and the down volume is 2.4 million shares. Amex is up 0.35 on volume of over 50,000 shares. The NASDAQ composite is up over a point and the NMS composite is up a half point. Gold is up 80 cents. Silver is unchanged at $6.30. Platinum is up $4.60 and palladium is up 10 cents. Deutschmark is at 54.85. That's slightly lower. Japanese yen at 0.782. The British pound at 174.35 is lower. Swiss franc at 64.95. Canadian dollar at 82.91. And the French franc is just over 16 cents. All right, a judge has lifted, millionaire businessman H. Ross Perot, speaking on the first day of a hearing in a breach of contract suit, said yesterday he did not violate an agreement with the computer business he founded by starting up a new company. Perot was sued by Electronic Data Systems Corporation, the Dallas-based company he founded in 1962 and sold to General Motors in 1984 for $2.5 billion after he started Perot Systems Corporation in June. EDS contends Perot violated an agreement reached when Perot severed ties with the auto giant in December 1986 for $700 million that he would not compete with EDS either directly or indirectly for 3 years. A judge has lifted a temporary restraining order he issued a day earlier in the Pillsbury Grand Metropolitan takeover case. Pillsbury also said it had been notified by the Securities and Exchange Commission that it is conducting an inquiry in the trading of Pillsbury securities, including options, prior to the October 4th tender offer announcement by Grand Metropolitan. A Pillsbury spokesman refused to comment further. The SEC frequently looks into trading patterns in takeover situations. Grand Met has made an unsolicited $5.2 billion takeover offer for Pillsbury. And Merrill Lynch saw its earnings slide 66.4% in the third quarter and says it was due to the post-crash stock slump and an extraordinary gain, in the year earlier period. The Wall Street giant has also announced a major accounting change in its employee retirement program that will free $220 million in excess pension funds and return them to the company. Well, it's supposed to be a cloudy day with temperatures just above 70 degrees in most areas. Stay tuned. You're watching the Business Channel.
Business Channel continues now with Hotline Report, brought to you by KWHY Commodities. Now here's the Commodity Trading Advisors with today's host.
Good morning and welcome to the Commodity Trading Advisor Report for this Friday. I am Ned Gershenson speaking to you live from our trading headquarters here in Huntington Beach. As you all know, I have been extremely bullish this live cattle market for quite some time, and I want to talk to you a little more today about what's going on out there. I'm constantly being asked how high I think this market can go. The answer I usually give is $80. Why? Well, I pick $80 because that is as high as the cash market has ever been. That was back in 1979 and 1988, last year. And it is logical to assume that if the situation is right, we can go there again. Current supply and demand fundamentals of the cattle tell us that this market belongs going as high as it has ever been before. Add to this the beef export situation I have talked about so often in the past, and we have a whole new ball game. Some rumors came across the trading floor yesterday that Japan is putting out tender offers for another 7,500 tons of beef. At the Texas Cattle Feeders Annual Convention earlier this week, Phil Seng, who's the vice president of the U.S. Meat Export Federation, pointed out some very interesting things. Listen to these facts. 5 years ago, there was no meat packer with offices in Japan. None. Today, there are 7 meat packers over there. Of the 40,000 retail outlets in Japan, only 3,600, less than 10%, were allowed to sell U.S. beef. Today, all of them can, all 40,000. Beef exports to Japan this year will total nearly $1.3 billion, and conservative estimates expect that number to double in the next 10 years. I strongly feel that over the course of the next 9 months, we will find out how high the cattle market can go. The price will only be limited by the consumer. The question becomes how to best take advantage of this impending move in the cattle. I am and have been advocating cattle spreads. We are currently in a December-February spread, but have been adding further out spreads with our specialists in the cattle pit. Yes, we at KWHY have our own floor trader who we have worked out an arrangement with to initiate and expedite our orders. The December-June spread and the April-August are the next positions we are taking, and we have been adding them when the proper opportunity exists. With the light volume in the August, you can't just place an order through your desk. You need someone on the floor who knows what the other traders are offering at that split second. This is a trading market. It is not something that you can just trade technically on breakouts and double tops. If you don't have someone down on the floor who knows what the other traders are offering and are selling and buying back, you're going to be in trouble trying to put on spreads in outright positions like that. There is no way that you can do anything with these spreads in the further out months unless you have somebody down on the floor. Furthermore, I want to talk to you about how you can possibly expect to compete with a professional floor trader and 5 professional commodity trading advisors. Maybe you can for the short haul, but over the long run, we will be outperforming you. Take a look at our most recent track record. Come on down to our offices in Huntington Beach and see what you have to compete with. Listen to us place trades with our broker down in the cattle pit. If you would rather be a part of this team and have our resources work for you, then call us. There is nothing more important for you to do than find out what your competition is doing. And if they are doing better than you are, and they are willing to let you join them as we are letting you, then take that opportunity now. I want you to call us at our main office at 1-800-444-6784, and we'll talk to you about this cattle spread. Have a good day trading, and we'll talk to you next week. Thank you for listening.
This has been the Commodity Trading Advisors, brought to you by KWHY Commodities.
Opportunity can't knock unless it's on your doorstep. Subscribe to the Wall Street Journal.
Call 800-228-3600. This great journal subscription offer, 13 weeks for just $29.75 with a money-back guarantee. 13 weeks, $29.75. Phone 800-228-3600 now for the Wall Street Journal.
Good morning. I'm Skip Lindeman. Renee Waddell has the day off. Retail sales index was out this morning, as well as the producer price index. The producer price index rose 0.4% for the month of September. Retail sales fell 0.4% in the month of September. Now, on our exchange call this morning is Gary Hankins. He's vice president with Morgan, Olmsted, Kennedy, and Gardner. Morning, Gary. Thanks for deciding to be with us this morning. What about these figures? Producer price index up and retail sales down. I believe you told me that was not unexpected?
Not too much unexpected, Skip. We're still in the mode of bad news is good news for the market, and primarily the news that has come out this morning relative to the economy is not particularly good news, and that, of course, is being interpreted by the stock market as good news. So what we've had this morning are retail sales, which decreased 0.4% in the month of September. Generally speaking, Wall Street was looking for an increase of 0.5%. So that's not particularly good news, but of course the market likes that. And on the other hand, producer prices for finished goods rose 0.4%. That is pretty much in line with expectations. That's now at a 4.5% compounded annual rate. So those two items indicate that the economy is beginning to slow down. The street likes that. The bond market likes that, which is rallying very strongly this morning. And IBM has come out with earnings this morning, reporting those at $2.10 for the third quarter. That is just a bit better than the street had been expecting. IBM, if you've been following that all week long, has been very strong up this morning, a point and a quarter at 119 and 7/8. So the kind of news that we're seeing out this morning shows that the economy is slowing down and inflation is continuing to stay in check.
Now, the inflation rate is, on an annual rate, is 4.3% for the first 9 months of 1988.
That's right.
All right, now that's nearly double last year's rate of 2.2%, yet that's still considered moderate, right?
That's still considered moderate in today's world. How do we define what moderate is? It's tough to tell, but in today's environment, that seems to be pretty much in line with expectations.
Does this do anything to the political race, Gary?
Great question. I think that the kind of news that we're seeing today has got to help the incumbent party and the Republican Party, because it's all relatively positive for the financial markets, and any kind of positive impact that we're going to see on the financial markets certainly is going to have a positive impact, at least I would think, for the Republican Party. So that being the case this morning, of course, so far, in any event.
Yeah, so any business of the bottom falling out that the Democrats might have hoped for so far has not happened.
That's exactly right.
Okay, thank you very much, Gary. I appreciate your being with us on the Business Channel this morning. That's Gary Hankins, Vice President with Morgan, Olmsted, Kennedy, and Gardner. I'm Skip Lindeman, and I'll be in for Renee Waddell for the rest of this morning and early afternoon. Thanks for being with us. Stay with us here on the Business Channel, Channel 22 in Los Angeles.
One way to find a job is to look in publications. Lots of publications.
Any luck?
Well, I've got newspapers, magazines, trade papers.
Find anything yet?
Newsletters, phone books, you name it.
There's a better way to find a better job.
Honey, look at this.
The National Business Employment Weekly.
It's published by the Wall Street Journal. It lists hundreds of high-paying jobs all across the country.
Now, what about managerial jobs?
Managerial, professional, technical, sales like mine. It even has articles on interviewing, writing a better resume, and how to succeed once you get the job.
What am I doing with all of these now that I have the National Business Employment Weekly?
Pick up the National Business Employment Weekly at a newsstand or call 800-228-6605 and receive 8 issues by first-class mail for only $35. 800-228-6605, the National Business Employment Weekly.
Don't make a career move without it.
The Business Channel continues now with Hotline Report, brought to you by Prudential Beige Securities. Now here is the Insider Transactions Report with your host, Mark Less.
This morning I'm going to cover a stock that has all of the characteristics that we like to see in a potential winner. The key people, the president and chairman, have bought over 1.2 million shares. The stock is down from 35 7/8 to its current price of 7.5. It's selling at less than 10 times earnings with virtually no long-term debt and a 10-year earnings growth rate of some 47% per year. Now, at the end of the broadcast, we'll list the telephone numbers that you can call to receive more information on this company. And we'll not be mentioning the company on the air by name for obvious reasons. The company's main business is credit card loss notification service. Over the past 10 to 15 years, the amount of credit cards that have been issued have grown geometrically. If you don't believe me, just open your own wallet right now and see how many cards that you're carrying. I'll bet more than one. Now, what's your biggest fear with these credit cards? Well, if you're like most people, your fear is that they'll be lost or stolen. Now, if you're real organized, what you'll do is you'll have a pencil and paper and write down all your credit cards with your account numbers and the phone numbers to call, and then safely put that piece of paper into a safe, and you'll have it handy in case anything's lost or stolen. Well, 99% of the people out there are not this organized and could benefit from these card loss notification services. Because for a $15 nominal fee per year, the company will register all of your cards. And if they're ever lost or stolen, one phone call cancels and replaces them. In fact, they'll even arrange for you to pick up emergency cash if that's needed. Now, this is a simple concept, but one that has generated a 47% per year growth in earnings for this company over the past 10 years. Unfortunately, last year, the company lost their biggest credit card contract with American Express, which accounts for some 10% of their business. Now, to give you an idea of how good the officers and directors of this company have been in trading their own stock, they dumped over $20 million worth of stock in the $25 to $35 range months before the American Express contract was canceled. Now, with the stock beaten down to the $7.50 area, they've begun buying again in large quantities. The president has tripled his position by buying over 1 million shares on the open market. And the chairman has quadrupled his position by buying some 200,000 shares on the open market. Now, this heavy open market buying by the corporate officers and directors is an indication to us that the key people in the company feel that the stock is substantially undervalued. Consider the fact that at 7.5, it's down some 80% from its high of 35 7/8 last year. The company has virtually no long-term debt, and they're sitting on $100 million in cash, which represents $3.60 per share versus that $7.50 stock price. But most importantly, in spite of losing a large contract, the company remains profitable, they're in a high-growth business, and they're selling for less than 10 times earnings. And we're buying some stock here at 7.5, but for more cautious investors, we're entering open orders around $7 in case the stock pulls back a little bit. As I said at the beginning of this program, those interested in some more background information on this company can call Mark Less or Lanny Hunt at the numbers that you see. You can call us toll-free in 818 or 213 areas at 800-231-1324 or direct at 714 area code 752-2280. If you're outside of 213 or 818, the toll-free number is 800-854-8696. Now, let me also remind those of you who would like to get started with us that we can open an account right over the phone in a matter of minutes and enter an open order to buy this stock. Once again, that toll-free number in 818 or 213 areas is 800-231-1324 or 714 area code 752-2280. Have a nice weekend.
This has been the Insider Transactions Report with your host, Mark Less, brought to you by Prudential Beige Securities.
Only come in one color, blue.
Good morning. My name is Jim Adams. I'm a portfolio manager with the investment advisory firm of Financial Horizons, and I'll be with you for a few of these updates this morning, giving you some of our views and thoughts on the market. Right now, that market is up 12.62 as measured by the Dow, and let's take a look at some of our other indices. The S&P future contract is up 1.50 at 278.50. Cash up 1.54, and the T-bonds plus 0.22 at 89.27. The Dow Jones Industrials at 2145.98. Transportation up 4.69. Utilities up 0.18. Tick figures of plus 89. And we're doing that on 22 million shares. In terms of the trading module, 645 are up and 248 are down. On balance volume, 15 million on the upside, 2 million on the downside. The American board, we have 302.79, up 0.75. Amex volume, 868,000 shares. NASDAQ up 1.29, and the NMS up 0.59. In our future prices, the knife at 157.30, up 0.70. Value line up 1.20. The Maxi at 418.90 is up 1.80. And the CRB index, 241.75, down 0.45. Okay, taking a look at the market again, of course, as you know, most investors have been trying to buy stock or going up with it on bad news, so to speak, as far as the economy is concerned, and going the other way around on good news. The reason for it, of course, if the economy looks very strong, there's concern that interest rates will rise, and that's supposedly bad for stocks. Let's examine that for a moment relative to other investment alternatives today, and I'm going to talk some about a stock, bond, and even a little bit about real estate. I think if you summarize the views of, let's say, fundamental investors anyway, as to what they were concerned with in terms of the market, it would either be a rise in interest rates, a substantial rise, or a recession, or a combination of the two. Now, one can look back and see the crash of '87 and rehash that and say that could happen again. But on a fundamental basis, there is concern, of course, that you will either have interest rates rise further because the Fed tightens up and the economy stays strong, or indeed we slip into a recession in 1989 as the economy runs out of steam. Those would be major concerns for why one would want to have a defensive position in the market. One of the things that is a bit bothersome to me anyway is some of the defensive alternatives that I see people moving towards, or at least being advertised in the newspapers and on the air. As an example, bonds perceived to be a safer area, and I'm talking about long-term bonds. And yet if one of the primary concerns is any further rise in interest rates, which I know right now looks like that is not happening, but let's say out over the next 6 or 9 months, a rise in interest rates would be a deterrent to the buying of long bonds. And there are a lot of investors, and perhaps some that shouldn't be doing it, trying to guess the high point in yields or play the yield curve, so to speak. Picking that point at which yields are at the point at their maximum level, the highest point, in other words, bonds at their lowest level, is a bit like trying to time the stock market, and one should recognize those risks. So there's a good deal of that going on. I'll try to cover that some in future updates. Stay with us. Glenn Edwards up in 1 moment.
Despite the seemingly limitless resources at their disposal, most professional money managers consistently fail to outperform the Dow Jones averages. A fact found positively inspiring by certain other investors, those who do significantly better, armed with little more than pencil and paper. The paper, of course, is Barron's, where each week you'll find probing looks into market developments, reports on promising companies, interviews with insightful stock pickers, and Barron's comprehensive survey of market listings, indexes, and indicators, all of which prepares you for that one task for which the professionals are no better equipped than you are, making smart decisions.
Subscribe to Barron's now and get 26 weeks for only $47 with a money-back guarantee. Call toll-free 800-854-4000. That's 800-854-4000.
Good morning. The time is 7 o'clock, and the Business Channel continues now with the latest market information. First, a look at the numbers at this hour. December S&P 500 up 1.50. Cash S&P 500 up 1.40. December T-bonds are up 23/32. The Dow Jones Industrial Average up 11.38 at 2144.74. Transportation's up 410. Utilities up 0.12. The ticker plus 44, trading 25.5 million shares. 639 advancing issues, 264 declining, 491 unchanged. Upside volume 16.8 million, downside volume 4.2 million. The Amex is up 0.69 on a million shares. NASDAQ Composite up 1.35. NMS Composite up 0.58. December Knife up 0.75. December Value Line up 0.90. October Maxi up 2 points. December CRB Index down 0.45. The weakest automobile sales in nearly a year dragged down retail sales 0.4% in September. The second straight decline and the sharpest drop since April, according to the Commerce Department this morning. Retail sales total $133.7 billion in September, a decrease of 0.4% from July. The decrease matches a 0.4% drop in retail sales in April, which was the largest since a 1% plunge in September and in October of 1987. The weakness was all in the sales of expensive, long-lasting goods, especially cars, which dropped 1.9% from August to September and 2.2% from July to August, according to the Census Bureau. Wholesale prices rose a moderate 0.4% last month as the largest decline in gasoline costs since January offset a drought-induced sharp rise in food prices. According to Labor Department figures, food prices soared 1.2% in September, triple the August rate, and a severe reminder to consumers that the effects of the summer drought are still about. Much of the gain in food costs came from escalating beef prices, as producers ended the herd liquidations that had depressed prices earlier in the drought cycle. On the positive side for consumers was a 3.3% plunge in energy prices, reflecting declines for all major fuels. Gasoline prices fell by 3.3%. Lockheed has been chosen over 2 other aerospace firms to build 125 new patrol planes for the Navy, a program that could be worth $5 billion and keep its Southern California facilities busy for another 10 years. The Navy has not yet announced its decision to go with Lockheed over Boeing and McDonnell Douglas, but the Los Angeles Times said the companies have been told of the decision by Navy officials. Santa Fe Southern Pacific Corporation announced that it had closed the $1.02 billion sale of Southern Pacific Transportation Company to Rio Grande Industries. In addition to the $1.02 billion, Rio Grande has agreed to pick up the outstanding debt of Southern Pacific Transportation Company. The Interstate Commerce Commission gave final approval to the sale of the 13,000-mile Southern Pacific on Wednesday, according to Santa Fe in its news release. Merrill Lynch & Company said the firm's net income declined 66% in the third quarter to $65.6 million or 58 cents a share from $195 million or $1.78 a share in the year-ago period. Commission revenues totaled $383 million. That's a 34% drop from the same period of a year ago. The company attributed the decline to a continuation of the slow stock market activity. For the first 9 months of the year, net income fell 52% to $187 million, compared with $387 million for the year-ago period. Earnings per share at Merrill Lynch dropped to $1.67 from $3.52 a share. Upjohn Company said its $600 million a year prescription hair growth medication Rogaine has been shipped to pharmacies nationwide and will be promoted with a 1989 TV advertising budget that could reach some $20 million. The Dow is up 10.84 points. Ed Kasanjian is next on the Business Channel with his hotline call. Stay tuned.
Do you want us to file a disability insurance claim for you also?
Isn't that just for injuries at work? I don't think my pregnancy would qualify.
You're probably thinking of workers' comp. This is the California Disability Insurance Program. Did you have money deducted for STI from your paycheck?
Oh, sure.
Well, then you can file a claim. You can get up to $244 a week.
Really? Where do I sign?
Right here.
Ask your employer for details. A reminder from your Employment Development Department.
The Business Channel continues now with Hotline Report, brought to you by EK Capital Management. Now here is the Mutual Fund Advisory with your host, Ed Kasanjian.
Good morning, and thanks for tuning in on this Friday. There's been a lot of marketing going on this year by the major brokerage firms of the closed-end funds. I've been getting a lot of questions about them, and have recently discussed them about 3 or 4 weeks ago. I thought I'd cover it again. While investors are shying away from the mutual funds, they are pouring money into the closed-end funds, which are similar to mutual funds, but they trade like stocks. There was a recent Wall Street Journal article about closed-end funds, and this is where I'm getting a lot of this information from. It seems that they are popular this year because many of the new issues have been bond funds with income that looks attractive for those who are looking to avoid stocks currently. I don't work very much at all with the closed-end funds, but hopefully today's program will answer some of the questions you may have about them, as I've been receiving a lot of them, as I said earlier. First of all, what is a closed-end fund, and how does it differ from an ordinary mutual fund? You can think of a closed-end fund as a company in business for the sole purpose of investing. The company initially offers a fixed number of shares to the public, just like any other company. Let's take an example of 1 million shares offering at $10 per share, so that the money raised is $10 million. there is only one offering, and the 1 million shares are initially held by those who bought at that offering price. If you wish to sell your shares, you can do so on the New York Stock Exchange or the other exchanges. Investors willing to buy and sell set the price of the shares just like any other stock. The price is not necessarily traded at the net asset value, and this is one major difference between an ordinary mutual fund and a closed-end fund. An ordinary mutual fund, which we're all used to, trades at net asset value, which is the total value of all the securities held by the fund divided by the number of shares. If an open-end fund had $10 million in assets with 1 million shares outstanding, the price or net asset value is $10 per share for a buyer or seller. But a closed-end fund with the same assets and number of shares would have the same net asset value, but the price per share could be at a premium of $11, or it could be trading at a discount, maybe at $9 per share, because the price is set in the open market by willing buyers and sellers, just like any other stock. It is, of course, dependent upon the total assets of the fund as well as market expectations. Almost all closed-end funds trade at less than their offering price shortly after the offering. Although you may purchase your shares initially without a commission, approximately 7% of the money raised goes to pay the underwriters or the brokers. So in my example, if $10 million is raised, $700,000 goes to expenses right away, leaving the fund with $9.3 million to invest. So with less assets behind each share, the price per share generally drops. If it is traded at net asset value, it would be at $9.30 per share after the initial expenses. But usually they trade at a discount to their net asset value because they are rarely promoted after the initial offering. There's usually not much of a demand for the issue. In bear markets, the discounts can go to extremes, and that is the time you can get the best value because you are buying assets at a discounted price. And because so many of these funds are trading at prices that are less than their net asset value held in their portfolio, we are seeing now, just like the corporate raters, rating the closed-end funds to redeem them at net asset value.
This has been the Mutual Fund Advisory with your host, Ed Kasanjian, brought to you by EK Capital Management.
Ever noticed that the people with the least time to waste always find time to read the Wall Street Journal?
Okay, I'll hold.
Perhaps it's because reading the journal had a lot to do with making them so busy in the first place.
Call 800-228-3600. This great journal subscription offer, 13 weeks for just $29.75 with a money-back guarantee. 13 weeks, $29.75. Phone 800-228-3600 now for the Wall Street Journal.
10 minutes after 7 a.m., Dow Industrial's off to a very strong start as we end the trading week. The Dow up over 11 points. The NASDAQ is also higher, up 1 1/3 points, and the Amex is up 3/4 of a point. Time for the commodity figures to be shown to you, and while you look at the commodity figures, I'll read you some news on commodities. COMEX gold futures were motionless following news that inflation pressure at the U.S. producer level slowed in September to a 0.4% rate from 0.6% in August. In the first hour, December gold had a minor gain of 50 cents an ounce. Tom Glazer of Gelderman Incorporated said the small increase in producer prices was completely in line with expectations, but the lack of a selling reaction reconfirmed that gold is trading on a longer-term perspective. OPEC is not likely to allow the price of crude oil to fall below $10 per barrel for a sustained period. That's according to U.S. Energy Secretary John Harrington. Answering questions at an oil conference in London, he said, "I don't believe OPEC will allow the price to fall below $10 and sustain it there for a period of time." Crude oil prices fell to 26-month lows last month, burdened by soaring OPEC production. Brent blend dropped to $11.20 a barrel, but has since partially recovered to around $12.65. Many oil analysts have said that oil prices could fall to single figures without action by OPEC to curb supplies. The dollar had little reaction, and U.S. Treasury bonds rose only slightly following release of a 0.4% rise in U.S. September producer prices and a 0.4% decline in September retail sales, dealers said. U.S. Treasury note and bond prices were well supported in London at current levels, with few investors or traders willing to push prices higher before the weekend, leaving the market little changed in the morning session, dealers said. The market is well bid and people are looking forward to the weekend, one trader said. If the market didn't react to the trade figures, it's unlikely to react to today's news, added another trader. Negotiations between the U.S. and the Soviet Union for a long-term grain agreement ended without an accord. A Soviet delegate said both sides had made new proposals, but they seemed to be unacceptable. The two governments will now decide whether to continue talks. Traders are calling live cattle futures steady to lower on the opening. Pork bellies steady to higher, and they have mixed ideas on hogs. They said pressure in cattle will stem from sluggish box beef movement and slow fed cattle trade yesterday. Losses will be limited by a reluctance to sell futures before next week's cattle on feed report. Expectations for steady to higher fed cattle prices next week also will temper selling interest, the traders said. Spillover pressure from cattle and indications that cash hog prices will be mixed are expected to pressure hog futures, they said. However, some traders said they expect prospects for steady to higher midday pork product prices to lift hog futures initially. Soybeans, corn, and wheat are being called slightly lower this morning. Traders said a weaker tone across the board partly reflects the conclusion of talks on a U.S.-USSR grains pact today, with no agreement and no new